The election in Germany happened. Friedrich Merz will be the next German chancellor and will most likely build a new government with the SPD. But how will the German economy do under this new administration? This and more after the intro. Hello and welcome to a new video here at Bloomberg Capital. My name is Henrik, and as already stated, today we will be talking about the German economy. In our last video, we already talked about some of the challenges Germany still has to face. But now we want to take a look at the DAX, the German stock index, and talk about how it will develop. So let's go straight ahead and take a look at the chart. Here we are actually seeing a pretty strong trend slowly forming out of the weakness that happened after the pandemic. But will this go on, or might it be over pretty soon? Our analysis actually tells us that we still have a bit of growth to look forward to. In the short term, however, there's a different story. We are expecting a consolidation here, so a sideways going price, followed by a small high and a bit of a bigger correction here. This is due to the current uncertainty that is still ongoing during the formation of the government, which takes some time. As we can see here with these statistics, this is the duration of the formation of government after the last few elections in Germany. And here we are seeing that especially after the last 3 elections, it took quite some time to build a new government. And we are seeing a continuation of this trend, even though the new government is already pretty much set in stone, as the CDU-CSU already stated which parties they do not want to work with. But Friedrich Merz is a person who knows what he wants, which is not necessarily a bad thing, but he may lack the needed willingness to compromise, which is needed for a very fast formation of government. Then if we go back to the chart, then this phase over the next 2 or 3 months is exactly this uncertainty, which shows itself in this sideways or even downwards developing price. After that, however, with the new government sworn in, we should see more growth coming in pretty soon, as most plans prior to the election involved various ways to support the economy. This uptrend should continue to this line up here, which is just the midpoint of this price channel here, originating around the year 2000. As the trend reaches this midway point here, it should lose a bit of momentum, but should roughly still move upwards for a little bit and follow the trend line. So this might look something like this, where we shoot over this trend line a little bit, then move mostly sideways, following this trend line upwards until at least late 2026, where we are expecting weakness in the global economy, which should also affect Germany. So from this point on, we might see some falling prices again. Where should you enter now? If you're already invested, you can just be happy and keep your positions open. But if not, there are some different strategies you can use to enter. So firstly, you could just enter now, wait out this phase, and then see this growth take prices higher. Or you can also try dollar cost averaging, meaning you split your position into many parts and invest it all along this phase. Or you could try to speculate a bit and hit this low here. But you have to be careful here not to miss it, or you might have to buy when prices are already rising. This low here should occur somewhere around like 21,100 and 21,700 euros. If you want to speculate and try to hit this low, you should look in this price range. But if you're also interested in some sectors of the German economy, I can talk about that for a bit. One sector that has been doing fantastically is defense. Here, companies like Rheinmetall saw an unparalleled growth. With Rheinmetall especially, we saw since the low here in 2020 an increase of over 2,600%, which is pretty mind-boggling. But this trend doesn't really seem to be stopping, as virtually each week the stock jumps another 30 or 40% to the upside. Now, some might see a chance of a peace, or at least a ceasefire in Ukraine, which obviously would be a good thing, but they say this will tank these stocks. But European rearmament really should continue on even after the end of this conflict. So a peaceful ceasefire might lead to a short-term correction in these stocks, but price should recover pretty quickly as spending will remain high in all of Europe. Another stock to look at here would be ThyssenKrupp, which have only started their ascent relatively recently. So, as they really haven't risen as much as Rheinmetall, they also don't really have as much of a downside potential in the case of a correction. Next, with the sectors of technology and infrastructure. These sectors have been very weak in Germany in the last few years, as there was virtually no support by the government to these industries. But there are some outliers in this regard. On one hand, we have Telekom. Now, this country, as you can see here, has actually seen quite a good performance in the last few years. But most of this performance comes from foreign markets, especially the US market. Should the domestic market of Germany finally ramp up, then we should see Telekom really gain even more momentum to take prices higher and higher. We are seeing pretty much the same thing here for Heidelberg Materials, which is also performing quite well in foreign markets so far, and should, if domestic markets ramp up their performance, really gain a lot of momentum and gain a crazy performance. Also, a sector to consider is finance, which should be very strong as government spending and debt should increase under the next government, as well as a general boost to the German economy. So finance should be on the forefront of that growth, but it will also be hit the hardest in the event of a crash. Two stocks to look towards in that regard are definitely, on one hand, Deutsche Bank, as well as the Commerzbank, which are both some of the biggest banks in Germany who should really benefit in the coming years. Lastly, there are consumer goods and the automotive industry, which should continue to not do too good, as these industries are very export focused, especially in Germany. And exports have not been doing too good, as other countries are picking up the slack, especially countries like China, who have managed to grow their exports year after year, leaving Germany behind, at least in relative terms. But also countries like the US are more and more focused on their own production as opposed to imports. So it is really no wonder that an export-focused industry is struggling if other countries are less willing to import. So we should see companies like Porsche here generally continue their struggle. Now, they might manage and stabilize their performance, leading to a stagnant price, but we really shouldn't see exploding prices anytime soon in this industry. So, to sum it up, we can say that the German economy should continue to do very well, at least in the next 1 or 2 years, and should, at least after the next 2 to 3 months of uncertainty, enter a new golden era in which it might even outperform markets like the US market, which it has failed to do for pretty much all of the last few decades. So with that, I hope I gave you a good overview of the German economy for at least the next 1 to 2 years. But as I already stated, in the year 2026, or rather towards the end of that year, we might see a downturn in the world economy, which would also affect Germany. So, if you are interested in staying up to date on that, then consider leaving us a subscription, as we are sure to inform you in due time about these unfolding events. And until next time, here at Bloomberg Capital.